Morning, everybody. Glad to see everybody coming in. Is anybody around today? Paul, we're all here. We're all here. January 29th, 2020, your market open. Futures looking strong, a couple 100 points up. Things are looking great, right? Hey, Naveed, how you doing? Morning, everybody. Morning, Sergio. All the regulars. Love to see everybody regulars. Some new names, too. Andrew's here. Massachusetts. Whereabouts in Massachusetts? I got to ask, Andrew. I'm glad we're coming through loud and clear too. Curious in that. I've got a connection to Worcester, Massachusetts. So my father went to school in Worcester, Massachusetts. Spent a lot of time around Worcester. So hey, good morning, Sat. Looking at all the regulars, Russ, Eli. Some of these new names though, which I'm good to see. I'm happy to see, I should say. So I hope everybody had a good night. Let's talk about the markets here. I've got a lot on the agenda, believe it or not. That's why I tried to get on a little bit earlier this morning. I'm still looking to try to sneak in on you guys at maybe like 4:40 or 8:40 or so and just kind of see what everybody's talking about. You know, maybe they're talking about what they did over the weekend. Sturbridge, okay. Maybe they're talking about what they did over the weekend, things they don't want me to hear. I don't know. I feel like the teacher up here. So anyway, virtually up here, of course. Let's take a look at what we're going to look at today. And then before I do that, market futures are up about 200 points. We were up higher than that earlier in the morning. We're going to look at the fallout. What happened yesterday? What the hell? And I've got it in here. What the hell happened to yesterday's games? What a crazy game we saw yesterday. A little bit of cat and mouse. I almost pulled out the I almost put Sat, you don't have to worry. I'm going to be around. We're going to be fine. So I almost pulled out the Wile E. Coyote pictures where he runs over the cliff and he's got the sign that says, uh-oh, or something like that. It's not time for that. One of these days, though, it will be. And I guarantee to make you laugh. I guarantee I'll make you laugh with that at least, even though it won't be at a great time. Anyhow, let's look at what we got for a trade rundown this morning. And I kind of changed it a little bit from what I sent everybody in my office, everybody that helps out so much in the office here. I sent them notes last night, and it was only a couple of things, and now it's turned into a little longer list. That's what happens when you get up I got up at 5 this morning. I slept in a little bit, but what the hell happened to yesterday's gains? To give you an idea, and I do my own trading, obviously, throughout the day. And you get you get more of an ebb and flow, and it helps me with my night trader service. It helps me with everything I do with Money Map when I'm doing my own individual thing. And I was on a conference call just to share something with you, and this was pretty funny. I was on a conference call, and I said, you know, what the hell's going on here? I got the S&P 500 going up. I got the NASDAQ going down. I got the Dow going up, and Boeing was helping the Dow up. And I've got the Russell 2000 up 2%. And if you know me, you know that you probably would know that I put a little bit of a short on the Russell 2000. Russell 2000 is extending itself right now, but I set aside one of my critical rules of trading. I paid some tuition yesterday because it was the first day above the 50-day moving average, and everybody gets excited about that. And I kind of got a little bit ahead of myself. We will see what's going on here over the next couple of days with these 50-day. The number of 50-day moving average breaks last night numbered 131. So if you follow me enough to know that I watch the 50-day as if it is the golden indicator, and it is the golden indicator out there, thousands of technical indicators for you to watch every day, thousands, from oscillators to momentum to all these crazy indicators, and then all the derivatives of those and the combinations of those. It comes down to one, and that's the 50-day moving average. The 50-day moving average. So we've got 131 companies that were making their way above. You have to spend 2 days above the 50-day before you get quote unquote confirmation. So today is the confirmation day for a lot of companies, and tomorrow will be as well. I think that's important to note as we're making our way through the earnings season. We've got a lot of stocks that are putting themselves in a test situation. So what the hell happened to yesterday's gains is where we start. 3 of this morning's headlines and how to trade them. I don't know why them is over there. We'll count that as the typo of the day, since you know I was putting this together at 5 o'clock in the morning. Update the market's critical technical test. That involves the 50-day, and exactly what I was just talking about a moment ago with 1 or 2 days above it. 3 breakout income stocks. You know what? Everybody, the people that have been coming to me, whether it's socially distancing while they're giving me the stiff arm, saying, hey, Chris, I need to talk to you when they're out on the street. Hey, I need 3 income stocks. Can you give me a couple of ideas? Or breakout stocks. And they're not talking about the 5-letter ticker symbols that I play as breakout stocks. They're talking about stocks that we all know that are breakout stocks. So I kind of took a piece from that and said, you know what? I'm going to cover some income stocks. Frank across the street is one of them. He says, you know, I'm 10 years away from retirement. I'm too close. I need some income stocks to kind of level things out here. So I'm going to hit them, and then 3 breakout stocks. We got a lot to hit, so let's get to it. That's a little rhyme for you. I'm obviously in a good mood today. Sorry about it if my jovialness is bothering you here. Here's what you saw yesterday, though. We took off out of the gate, and take a good look at that, because that's what it's going to look like today. This morning, we're going to go from here up to about there again. So we popped out of the gate. Everybody was excited, and then the S&P 500 quickly started to dissipate, and within an hour and a half of trading, we had traded down to nearly the lows for the day, which is almost where we closed. You could see that there was a little bit, you know how I always talk about that 12 o'clock to 2 o'clock. Sometimes it's 12:30 or 11:30. There's a 2-hour period in the day where you typically get a little bit more light trading. Everybody's out to lunch. Here it is. It went from 12:30 up to 2 o'clock. You can see the volume dropped off. We started to see things poke up. Everybody got a little optimistic, and then everybody came back to work again and said, no, I don't think so. Why did they say no? I don't think so. Well, it's because we have got 161 companies still to go before the end of the week. There are actually 600 different companies. If you look beyond the NASDAQ, the S&P 500, the small cap, it's 600 companies between now and 5 o'clock on Friday night. But with that much out there in terms of the expectations for what earnings can do, you're going to see people start to sideline. These are the traders that are pulling out of the market mid-afternoon or so and saying, all right, I'm going to take my profits right now. If I'm up, I'm out, and then move on to the next day. They've turned into day traders for this week, next week, and the week following. So the trading is going to get a little choppier on an intraday basis. But when we look at the closing basis, there's still signs of positive effect out there. We're still seeing trends that are breaking. 50-day trends are not moving higher, but if you look at that daily trends, the 50 days, we're seeing more of those 50 days being taken out. I'm going to show you a few of them today, as well as one stock that right now is getting ready to break through its 200-day moving average. But the trend is slowly turning bullish. You know that I've been a pessimist for the last last 3 weeks or so, setting myself up negatively. And now the tide has turned, and it's time to kind of ride this wave for a little while. But mark my words, people, we will be back in that situation that we felt we were in February and March. Unfortunately, it's going to happen. And I don't care who you ask. If you ask Goldman Sachs, they have people there that are saying this is going to happen. You ask Morgan Stanley, this is going to happen. I think everybody except for Uncle Powell, Jerome Powell, the Fed chairman, who's got his arm around us and he's given us $1 to make us feel all right and say, hey, everything's going to be great. We are going to have maybe not a retest of that March low, but I think in order for this to be a true market bottom, we'll have to retest that March low. And I'll be there I will be there navigating you through that with an expeditious manner for sure. We'll be very nimble when that time comes. Let's go back. Let's get away from my talking here because we got a lot of slides to go through. So that's what the hell happened yesterday. Where did all the good gains go? That's a reference to, I don't know who sang it in the 80s, but The Good Guys, I think is what it was, but it popped into my head. So what do we see in the headlines this morning? After all that moving around yesterday, and by the way, the IWM still finished up 2%. The NASDAQ finished in the red, and that's because you've got so many darn NASDAQ companies coming up with their earnings over the next couple of days. General Electric announced their earnings. Missed by 13 cents. Reports revenue in lines. This is almost a trade, and it gets down to that law of low numbers here that we have to deal with. Reports revenue in line, so they missed on the bottom. Now, their revenue in line included a 24% drop from year over year. That's what bothers me about some of these earnings. When we see a report of a revenue in line, well, that's great. It makes you feel warm and fuzzy, and they missed on their earnings per share number, but they're 24% lower year over year on a revenue basis right now. And that's looking at the data that they just released this morning. They expect Q2 financial results are going to decline sequentially. We're going to see, and they withdraw as everybody else is. 84% of the companies right now that have announced have withdrawn their guidance. We're going to see GE go lower. The analyst community is already fairly bearish on it, but you're not seeing any price reiterations. You're not seeing anybody defend GE. Last quarter, there were a lot of analysts out there that were defending GE right out of the gate. That's not the case this year. You take a look at GE stock and you can see why. You have got, I don't want to call it a dumpster fire type of stock. It's a bad situation. Here in Cincinnati, they laid off half of their GE engine area that's up in Sharonville, or Evendale, actually. So this is a situation where, the company has gone from bad to now worse because the revenue is turning into a situation. And I think I've mentioned before, GE is one of those huge companies, and I use this analogy often. GE is one of those huge companies that you can't just go out there and say, hey, let's turn things around on a dime. I think we need to change the direction of this company and this subsidiary and this subsidiary. It takes years for them to do it, like IBM. That's why IBM has taken so long to turn itself around. GE's the same way. So we're now back down. And I remember when the first time we hit 9 a few years ago on GE, and then we hit 8.5 last year. Now we're down at $6 again, 6.5. How low can you go? It's a game of limbo with GE. Right now, I think GE is going to go down below that 6.5. And I think we're going to see a 5 handle on GE before the next quarter's earnings season. So I look at this from my perspective. If the technicals right now are horrible on GE on a long-term basis, the fundamentals are not good. And I'm not a fundamental guy, so you know that it's got to be something that's bad if I'm pointing it out. And then the sentiment is somewhat mixed on it. You see people that hate GE. You also have people that say the general's never going to go away. This is one that if you have it in your portfolio and you want to do something with it, you sell some covered calls. You sell something against the stock, or you just simply step out of it and move aside, get out of the way, and move to something else that's going to be moving a little bit better than GE. I'm trying to hit that Gilead news right now, folks. Since I saw it. Actually, I'm not seeing anything on that lead. I'll bring it up to you in a second if I get it. I do want to look into that, because not that Gilead's not on my list here. It's not on the list today, but I want you to know that, if I can see something that on my wire that you can't pick up, I want to make sure we get it. This is not going to be, it's news on remdesivir. It's not going to be a home drug that can reduce a bad outcome by patients if used early enough. It's not going to be a home run drug. Hold on. Futures skyrocket after Gilead issues statement on data emerging from NIAID study of investigational antiviral remdesivir for the treatment of COVID-19. So this is a COVID-19 headline. Apparently Gilead coming out with some test results that have not been seen yet up to date with the market. So let me jump back from that shiny object real quickly and go back to that GE. GE right now, that $6.57 range, we're going to continue to see some pressure there. How you trade the earnings right now, it's a defensive stock. You trade it to the downside. The areas of their company that do have some business, medical, are slowing down a little bit. And then obviously their aviation service is slowing down as well. So next one, American Tower beat by 14 cents. American Tower slips in. Nobody's really watching it, but American Tower beats by 14 cents. Inline revenues right now, they're trading 243. They're trading higher in the pre-market. Over the last year, AMT's beaten EPS estimates 100% of the time, and they've beaten their revenue estimates 100% of the time. It's fantastic. A stock that is actually nailing everything down and moving forward. One of the reasons still sees the 5G build out as a long-term growth catalyst. This company's out there putting all those new towers up, and that's obviously as that 5G network continues to expand, AMT is right at the core of that business. Great for them, good for Verizon too. Verizon we looked at on Monday as a bullish income stock for your portfolio. There's a chart of AMT. Notice it's a little expensive at $255 right now. Notice so that it's getting ready to break through to new highs. Not many stocks, and I could tell you how many if I wanted to pull up my data page, but not many stocks are making new highs anywhere in this market. AMT has not only bounced back from that 175, which was the March lows, to 255, but now breaking higher to new highs. AMT is one that you would want to jump on, and actually they pay a little bit of a dividend as well. So AMT today, beating earnings, bullish outlook, breaking above 255. I like this stock to run to 280 right now, 280 in the short term. So there's your trade on that headline for the day. And one more earnings headline. We're going to stick with earnings headlines today. I didn't have that Gilead headline. Otherwise, I would have done something on that. GlaxoSmithKline beats. Obviously, these are in British pounds because that's where they're based. They beat on revenues. They beat on the top line. And in a strange move, they came out and they reaffirmed their fiscal year 2020 guidance. So this is one of the companies that is not dropping their guidance. They're one of the 16% that are maintaining a guidance. And that 84% that's dropping, it's going to go higher. They reaffirmed their guidance for the year. Their earnings per share is going to be 119 versus 119 to 123 versus a range that was at 115. So they're actually raising their earnings per share. They're cutting 10% of their workforce. So they're getting lean right now and expecting more cancellations. I'm sorry. This is for Boeing here. There is your typo of the day. Let's cut with the earnings right now on GlaxoSmithKline because I just gave you a look at the next stock, obviously being Boeing. And yes, USO is really trading at 16 this morning. Today is the 29th, which means they did their 8-for-1 split, reverse split, Walter. That's why it's up at $18. It's the same value as it was yesterday at the close when we were down in the twos. So, sorry. So there's your GlaxoSmithKline breaking above the 200-day moving average. This stock there's your 50-day. We broke through it. You had 2 days above it, and the stock took off from $40 to $43 very quickly, about a 7% move. The 200-day moving average is right here with that blue line, and it's testing it today. I think we're going to see a bounce off of that. You've got a target of $50 before the third quarter right now for GSX GlaxoSmithKline. And then we're going to move on to the real quick update on the critical test. Now, I go through this chart every single time, because, and I warned you that I was going to do that because this is the most important chart that you need to watch on a daily basis. So what we saw here is now our posting of our second and now third day above that 50-day moving average. Boom, boom, boom. 50-day is declining, which takes a little bit of the effect above the which takes a little bit of the effect of the moving above the 50-day moving, because the 50-day is still bearish when it's in this trend. But nonetheless, you can start to look for a consolidation and rollover of this. We're 3 days above. We're going to come back down and test it at some point here over the next couple of weeks. But this is a huge technical test that a lot of people are watching, myself included. I'm watching it on each one of the components as well. And this is where you really want to be focusing your efforts on timing the market per se, or at least I don't want you to time it. I want you to maintain the trend or time the trend here, let's say. Timing the market involves hitting that one point in time where the market has hit its top and it's getting ready to go back down. Most people miss it. We actually got, I don't want to say lucky, but luck prefers a prepared trader, right? Or you're trying to find the bottom right before it goes up to the top. You miss that and you miss the market point. We're timing a trend here, which is something that's a window of opportunity that allows us to move in and out with that trend, which is why we want to watch that 50-day recommendation. Boeing is trading up higher right now. I don't think you load into Boeing because they announced that they're up because they announced better than they're already worse expected numbers, but they also announced a 10% cut to their workforce, and they've got, I think, in 2 months, 1 year, the 1 year point on a bunch of contracts that's coming up, and they're expecting cancellations because that's when the people who ordered them can actually start to cancel or change those orders after a year. So if they ordered 50 planes and they only want 32 and they haven't been delivered after a year, they can say, okay, we're going to drop 18 from the order. That's loosely put. I'm not a lawyer by any measure and look at those orders. So, but that is loosely how those are structured. So we're right now looking at that 50-day simply because the trend in the S&P 500 is in the process of possibly changing. Those 3 days above it tell us that we've got a market that's going to move higher and move a little bit under, a little bit, with a bullish bias, I guess you could say, over the next couple of weeks. I'm sorry, I'm trying to watch the stream there. I'm going to look at the slide so we can power through 9:05. So there's the first test. Look at what happened with the NASDAQ, though. We moved above it more than a week ago, about 14 days ago. And we have done a consolidation with the NASDAQ. And that is simply because the NASDAQ has gone very far in a short amount of time. And we had a number of companies that are coming out. Obviously, Google last night with some good numbers. But a lot of people didn't have confidence in the numbers, and that's why you see the sideways trade here. If we get two or three different companies that come out and really knock the cover off the ball that are in the NASDAQ 100, the top of the NASDAQ 100, you're going to see the cubes trade up to the 220 and start to turn that 50-day around. So we'll start to see it trending higher. I'll make it up to some of those charts that I'm seeing, or tickers that I see you guys asking me in a few minutes. Here's another one that you want to look at, and this is a relative strength. This is taking a different view, You're looking at the actual the equal weighted S&P 500 versus the regular weighted S&P, the market cap weighted S&P 500. So the RSP, which is the equal weight, versus the SPY, which is the market cap weight. And what you've seen happen here is the RSP has been lagging for the last month or so. That's telling you that you've got the majority of the companies that are heavily weighted in the S&P 500 doing all the work. This has been flat as the market has gone up 30%. Now, all of a sudden, we're seeing a hook in this, which tells us that the companies that aren't in the top of the market weight of the S&P 500 are starting to gain on the S&P 500. That's simply put as all of the boats in the harbor are now starting to rise with the tide. They weren't for the last month, and now we're seeing the boats in the harbor, all of them, not just the big strong ones, the big cigarette boats that go fast in this market, but you're seeing the tugboats and the rowboats that are coming up in the S&P 500. This means that you're getting a little more breadth in this market, and along with that 50-day move is going to start to move us a little bit higher. Again, do I think we're going to go back up to our highs? No, I don't. But I think you're going to have some individual companies that are going to be making trails right now. 3 breakout income stocks. This goes to Frank asking me over and over, what kind of income stocks can I buy out there? What is out there right now that's safe to buy? Pfizer came up on the list. These are all dividend yielding stocks, more than 3%. There's one in here that's a 4% dividend yielder I think you'll like. But Pfizer right now, look at it above its 200-day moving average. The 50-day is rolling over. That is bullish for the pharmaceutical company. And the pharmaceutical company is one of those that has been leading over the last month and a half or so. Think about the news with Gilead. Think about the focus on the pharmaceuticals. It is the hot sector right now. Pfizer is one of the leaders, and you get a great dividend from that. That is one of my breakout income stocks. Olin is giving you around a 4% dividend right now. The stock is broken above its 50-day, and it's preparing to break above its 200-day moving average. That 50-day is going to get crossed by the 20-day moving average. Notice this all comes down to technicals for you folks. It's all about the technicals. I'm going to hammer it into everybody's head as we make it through this market that the technicals are the one thing that truly matter. The Fed coming out and writing blank checks, that can last for weeks, maybe a month or so, but the technicals in this market are the one thing that you need to watch. The data and the price, the movement and the trends don't lie. They tell us what's going on. They are the EKG of this market. So With Olin moving up above its 200-day moving average, a nice yield on Olin as well. This is one that's great for the dividend yield income portfolio as well. And then another one that I think is going to come to some surprise. And I think every day we get somebody who asks about Target. Nice 4.2% dividend yield on Target, and it is breaking up above that 110 range. You've got the stock above its 200-day. The 50-day is turning into a bullish pattern. Target is going to be one of those within the next couple of months, and they've got earnings that'll be coming, but they are one of the companies. It's not as great as Amazon, but has certainly been one of the companies that has benefited from remaining open. They have food and everything else we needed during the COVID-19. It's only going to excel more after we get out of this period. I think Target trades its way up to 125 and even starts to look at going to new highs here over the next 3 months or so. So Target, a good hold in the portfolio for income. 3 stocks breaking through critical support. So these are stocks that are right now saying, look at me, I'm moving through the support and it's getting time to run. D.R. Horton. Home builders got slaughtered in March. Everybody looked at it and said, this is going to be terrible for the business. I can tell you there are 4 brand new homes going up right behind my house right now. They're working on them, and there are another 4 that are going to be going up after that. They're not from D.R. Horton. It's one of these higher end custom companies that does the houses here in Cincinnati because we're in a historic district. But D.R. Horton is going to get busy real quickly right now. They are on a fundamental track to start improving immediately here. The 50-day got left behind yesterday. Today would give us our second day above the 50-day, which is confirmation that we're going to see a volatility breakout. It's going to be held back a little bit by the possible overbought signal when we hit 70 on the RSI. Look at what happened in February. We were able to go a little bit higher, squeeze a little bit of juice from the orange in that situation. I think that's going to have the stock at $50, and that's where you'll see a test. We'll bump up to $50. It'll pull back a little bit. Maybe you'll be able to buy it at 48, and then the next run's going to shoot D.R. Horton through $50. So a nice breakout stock going through critical support right now. Another one, Fastenal, also has a connection not only with the industrial area of the market, but also with the housing. They make all kinds of, guess it, fasteners and such. So the company broke above. This is special too. It broke above within 2 days. Its 200-day moving average and its 50-day moving average. And the thing that's special here is a 50-day was above that 200-day, not below it, as most of the stocks are now. And you've got this interesting convergence of all 3 indicators coming together, and they're also starting to pop higher. They're starting to trend higher. The 200-day is trending higher. The 50-day is turning around, and the traders trend line, the 20-day, trading higher. There's room on the RSI to move up. The volume starting to come in on the stock. This stock's going to crack above 40 in no time at all, I believe. And I think you'll see some pullback when it gets overbought. But Fastenal is not one of those companies that continues to really see an oversold or an overbought signal really start to slow the process of the stock. And then Tyson Foods I have to throw in here. And this is a weird one to throw in given the news that we've seen this morning and last night. The president basically saying the meat packing or the meat producers have to stay open, using his presidential powers to do that. Tyson has already said and they closed a couple of plants last week. They have already said we are trying to get everything we need so that our plant workers can be safe. But Hormel, Tyson, a few other companies out there that do the same are going to be in a good position here. And you see Tyson breaking through its 50-day yesterday. We'll see another break today with the stock trading higher. We failed to make it through about a week, 7 trading days ago. But now you've got look at the increase in the volume. And I love the fact that we're down at 50 on the RSI. This stock is going to be ready to run up to around a 67.5, which is where you saw the support for the stock on the way back down. And then you'll see a little bit of a rest before it shoots up to that 75 area. So Alex, Hormel, still love Hormel. Nice little pullback in it, gives you an opportunity. Those are the companies that are going to be going back to work, whether they like it or not. Bump day is in effect. This is how we're trading today. And after I go through this, I'll go through a few of the stock tickers that you've asked about that I haven't covered here. Bump days effect. Remember last week I changed hump day to bump day. Wednesdays are always trading higher on the market. Bump days in effect. Futures are trading higher. We already know it looks like it's going to start with a positive backdrop. A combined 609 companies announcing between now and 5 o'clock on Friday. We're still going to see some volatility here, folks. It's not over in terms of the volatility up and down. I think it's going to be sideways, but we get a lot of big cap tech that's going to be reporting. And if they all come through like Google, with Google trading higher, that's going to be great. Trends and breakouts of the 50-day moving average are key right now. 63 of those companies trading above their 50-day moving average just yesterday alone. It tells you that there is a movement in the market. It's not just a little bit of an activity. That movement turns to momentum at some point. We're not there yet, but it turns to momentum. Today's close above, or yesterday's, on the 50-day of the S&P 500 are a bullish catalyst. We need to see another day today. The Dow has got to be up there as well, and the NASDAQ has got to hold on to its relative strength. And then remember, Thursday and Friday, you're going to start looking to tighten up your holdings because the weekend's approaching, and I don't think you're going to see as much in terms of negative headlines on the weekend this week. So it's a little better to hold over this weekend possibly. We'll see how the market gauges it as we go in. My gut tells me, and the trader's gut is something that everybody needs to have. My trader's gut tells me that we're going to probably see less selling as we head into Thursday and Friday this week, because we are seeing the opening of some of these states. We're seeing some businesses start to get out there. So there's something to be optimistic about, not hope about, but be optimistic, actual things that we can see happening. Hope is when we see the Fed writing checks that are going to support us, for the next 6 months, or I don't want to get on that soapbox. Let's go through some of your charts real quickly, but watch Thursday and Friday, because that's when we're going to actually see a good indication of what's going to happen. Wayne, yes, I am going to be posting a new trade to the night trader system today. Let's look at some of just a couple, because I'm going to extend us a couple minutes here, and I'll look at a couple of the charts. JWM, Nordstrom's. They actually opened one of their first stores here. See a little bit of a pop. It's hard to pick something in retail. Let's look at the retail right before we look at that. If you look at the XRT, we broke above the 50-day, and this is a one hell of a rebound or a relief rally. I mean, put it this way. I don't think when you use the term relief rally, I don't think you're ever going to see a relief rally that's going to hit the market like the one we've got, but it's a relief rally. Remember that chart I showed you yesterday where you come up and the end of stage one has that nice rally where we return to reality. The reality rally, I'll call it from now on. And that's right before you take the next dip down. That relief rally is going to power that. And you're going to see people coming in simply because we've got the retail stores opening. We've got companies going back to business. So I think that we're going to see some rallies here. JWN was one of the companies to get out there and say, hey, we're opening early, or we're going to get some of our stores open early. JWN also, you have to think about it, is one of the companies that they've got a clientele that is going to be a little stickier. They're going to stick around because they've got, if you haven't bought a suit there, I bought a suit there a few years ago. It's a whole process with a personal shopper and your seamstress and all of these people that are working on it. And the next time you go in, you're with the same people. And that type of service is what people like. And they're going to go back to JWN. Now, they're obviously pulling down cash right now, and they're trying to figure out how they can get through this slim part of the year. But I think JWM is going to see some upside activity here. It's not going to outpace the rest of the market. The stores that are going to outpace the rest of the market are those that are going to get blitzed. JM's got one right there, and I already covered it. Target, if you're looking in the retail sector, has got to be one of the stocks that you want to look at before you look at a JWN, just based on the fact that we've already broken above that 50-day, and that 50-day starting to trend higher. L brands, this is another one that I think you'd have to put in the same quarter or category as JWM, and especially since L Brands has a lot of their activity, or does a lot of activity on the line, if you will. And I'm making fun of it when I say on the line. They do a lot of online activity, or they've been trying to get a lot of that activity online. LB, I would put in the bottom quarter of what I'd be looking at for the retail companies. I think it's going to be a little harder go for them in terms of getting back. When you look at Bed Bath and Beyond, BBBY. Someone asked about that yesterday. I'd say a Bed Bath and Beyond is going to be a little higher on the list simply because in the retail sector, because if you think about it, there are going to be people running out to start purchasing things for their house. Also, the other one that's really starting to interest me now, Home Depot and the Lowe's. Look at the break above the 200-day in this particular situation and the 50-day. They've been locked down somewhat. You've been able to go to the Home Depot. It's somewhat essential. It's essential-ish, but they're breaking down up above the 200-day moving average. And all of us, including myself, are going to be out there buying everything that we haven't been able to buy to get out and work in the yard and do all these fun things around the house. Their earnings are going to be, I think, positive because we've been buying a lot of paint. Everybody's been buying a lot of paint. I asked the person at the Home Depot, what is the number one thing you're selling? And he said, we're selling more paint than we've ever sold. And it's because you and I have been painting the insides of our houses. So Google, I see popping up here a couple of times. Let's take a look at Alphabet Google. Stock is kind of in that no man's land between the 200-day and the 50-day. I think today you're going to see a break above that 200-day, going to continue up towards 1400 on Google. I'd like to have the 50-day trending higher. That is my big bailiwick on Google, or my sticky wicket, let's call it. I want to see that starting to trade a little bit higher in an uptrend, but Google above the 200-day puts it in a small group, You know what, Andrew? I'd agree with you on Ulta, but I saw a really, really, really telling women they can't get makeup is a bad idea. I saw a great article in Bloomberg, though, about how women, and I guess men, I mean, I've been going without a haircut for a month and a half now, men have gotten used to we've gotten used to being a little more natural in our look. And the fact that we've been doing Zooms and all of these conferences, the gist of the article was, is Ulta going to come back as strong as it was before? Because perhaps there's going to be less demand because there's less demand to get to actually put on as much makeup to be in the office, if you will. So I think this is going to be an interesting one to watch, kind of like Amazon, and Chewy. We're doing a lot more business with Chewy right now simply because it's convenient and it puts it on our doorstep. But is that something that sticks on after we're allowed to go out? In my case, it does. Ulta is going to be, I think, a case study on that. So let's look at a couple more here. Facebook. I am not a Facebook, especially with the obviously they're right now scattering. We talked about Facebook yesterday. Ooh, I just lost a signal on the feed for some reason here. Let me try to pull up a different. Oh, there we go. Facebook rejected at the 200-day, 50 days. My view on Facebook here is you're going to see a test at 175 at the 50-day moving average, and it's going to start to trend higher again. Their earnings are going to focus right on their focus is going to be on the advertising. I'm sorry, I'm looking at two different things here. They're going to focus is going to be on the advertising, them trying to jump out and do the same thing as Zoom for up to 50 people. I think they're a little late to the game for that right now, and it's going to be something that'll be cute. But I also think, Instagram's probably doing more business than what they'll do from Zoom. Not a big bull on Facebook. I think it'll perform with the NASDAQ 100. We're up, let's see. Right now on Facebook, we're up 40% from the bottom. I'd expect them to go back down to 175 and then break up to 200. And I think you buy it at 175 at that point. Zoom trading below 150, and you're asking, is that a good price? And absolutely. This is the last one that I gave you. When it broke up towards 175 and 180, I said 150 to 140 is the range that you want to buy it on the next pullback here. And I think that's still the case here. The 50 days trending strongly to the upside. Zoom 130. If I could buy it at 130, I'd buy it at 130 right now, because that'd be another bounce off the Zoom. Look at these bounces off the 50-day moving average for Zoom. You have a 20 or 30, 32% move from that one. We didn't quite make it down to the 50-day on this bounce from this particular, and this is the one where we bought it with fast profits. You got a 65% move from that. Zoom has been very sensitive to the 50-day, as most stocks are. And if we pulled back to that at 130, I'd really be a buyer. But at 140, 150, I'd start to nibble at it a little bit. I'd like to see it a little bit lower. I'd like to see it at 140 to buy in. That's around where the 20-day is. Thoughts on AT&T now that you've got you've got a CEO that is leaving here, and I'm angry with AT&T right now because of my DirecTV. I think AT&T though is you've got to call it a good utility stock almost. It's not as good as so. Let me put Verizon next to AT&T and say, okay, here's your Verizon. I prefer Verizon. Dividend is a little higher on Verizon. I like the structure corporately, the fundamentals of Verizon more than I like the fundamentals of AT&T. AT&T, as I mentioned, owns DirecTV. I'm getting ready to cancel my DirecTV simply because when you figure out that you're paying $300 a month for a subscription TV service and you're watching more streaming video than anything else, you get rid of the $300. I think that the DirecTV is going to be a little bit of a draw on AT&T as they move forward. And I know they're trying to turn it into AT&T TV, but I don't think that's going to be the play here. So Verizon over AT&T is what I'd tell you, Derry. I'd much more prefer Verizon. One more with AMD, and then I'm going to wish you all adieu as I go and do what I do here. So AMD trading back up to $56 here. A little consolidation as we're seeing semiconductor companies, the XSD. Let's look at that XSD breaking through the 200-day moving average. You're seeing some semis that are actually starting to pull sideways a little bit. Intel's doing a little bit. The one that's not, NVIDIA. NVIDIA's still moving around and showing why it's the best in the breed here. So NVIDIA over AMD, AMD over Intel. There's your pecking order, Barber. I like them all. I like NVIDIA much more. It's more expensive, but you're getting, let's face it, when you look at it from a percent return, the price of the stock, unless you can't purchase the price, the price really becomes something that's not really a matter that you need to worry about too much here. All right, with that, I'm going to go ahead and shut it down, get ready for my 11 o'clock with my night trader people. Also put together a couple of trades. I hope you have a great day. Remember, bump days in effect here, so we're going to see the market go higher, or we should be. Ice cream sandwich for everybody if it closes lower. Yeah, that's the bet I want to make because I don't want to pay out ice cream sandwiches. So hope everybody has a great day. Get out there and trade. Use some of the stocks, the breakout stocks that I gave you, the income stocks. Watch the market throughout the day's trading activity, though. I think we'll see a little bit of a stronger breadth moving into the close today than we did yesterday. And I think that'll lead us to a stronger Thursday as well. Trade safely. Get out. Be safe. Get outside. Get some fresh air. See me here tomorrow at 8:45. Hope to catch you then. We'll talk more about the market, more about the opportunities of 50 days giving us. Have a great day, folks.